What's up, everybody? In this two-part video series, we are going to discuss owning a home as an investment property versus owning a home as a primary residence. But before I begin, I would highly recommend anyone who's interested in understanding how to build wealth or reach financial freedom read the book Rich Dad, Poor Dad, which is where a lot of the content from today's video was inspired. You know, you can go on YouTube and watch all your crypto videos or buy a bunch of Tesla stock and think you're gonna make it big, but if you don't understand how money works, you'll more likely than not end up spending it in the wrong places and stay in a vicious cycle of income dependence. Okay, so let's break this down as simply as I can. Income is money you earn. If you work a typical job, you might make a paycheck for say $4,000 a month, and Uncle Sam will take $1,000 of that in taxes. Not a very great way to build wealth, in my humble opinion, but we all have income. Everyone understands what that means. Now, expenses are necessities you need to spend money on. Food, gas, pet toys. We all know living ain't free, and we each spend money every day on a variety of goods and services. What you really need to understand before we talk about investing in real estate is the difference between an asset, something you own that makes you money, and a liability, which is something that you also probably own, but that you owe money on. So the way I see it, an asset is something you own for the purpose of making money, or to be specific, build wealth. And a liability is something you own for its utility, which may or may not directly lead to making money or wealth building. For example, I would definitely consider a car a liability unless it's a luxury investment that will increase in value. Because although your car might be worth $30,000 and without it, you can't do the work that earns you your income, unless the car itself is what's making you money. For example, your business is people coming to see your car because it's so awesome and that's how you make your living. You probably use the car for travel. And yes, you might make money when you travel, but it's not the travel itself that is making you money. It's what you do after you reach your location that has the potential to make you money and then help you build wealth. Another example of a liability is something like a jet ski. Unless your jet ski increases in value and people pay you for it to ride it every day, it's a leisure tool, and its utility is allowing you to have a good time. But don't get me wrong, I'm all about having a good time, but having a good time is not an asset. An asset is something you purchase for the purpose of making money. You don't purchase Tesla shares because you enjoy the utility of looking at the trade confirmation. You purchase Tesla shares because you think the company will increase in value and you'll make money. Okay, here's the deal, guys. You know, I'm a 24-year-old dude with a business degree and a real estate sales company. There are plenty of more experienced investors than I, but I did study a lot of their work extensively in my early 20s. Margin of Safety, The Intelligent Investor, Rich Dad, Poor Dad, Real One Investing, and a whole lot of real estate investment content. I would highly recommend meet Kevin's YouTube channel if you guys haven't checked that out. He's actually running for governor right now. So check all that stuff out or talk to other people besides me if you want more validation on these claims. But this video is my perspective. If you want to build wealth in the USA, you essentially have only 3 options, and they are not mutually exclusive. Number 1, and this is what I'm doing, create a corporation that you own and build wealth through building out your own business. My business is an asset to me because I own it and it exists. Well, it exists for a purpose and I do give most of my money away, but normal real estate brokerages exist to serve clients and make profit. So number 1 for building wealth is create and own a business. Number 2 is buy into and own a portion of a business. This is what happens when you buy stocks and shares. You're taking your income and using it to purchase fractional ownership of an asset that makes money. That's right. There's no way out of this. In order to build wealth, you will have to own an asset, which remember is simply something that makes money. And basically only 2 asset classes can actually build true lasting wealth, and that's corporations and real estate. But as we'll discuss in part 2 of this video, if you understand the fundamentals correctly and you buy real estate as an investment, it's essentially the most easy to understand business model in the whole world. So number 3, as I mentioned, is owning real estate. You own a property, someone rents it, you make all the money. We've all done it. We all get it. Sure, I mean, we've all bought food at the grocery store too, but we have no idea how the back end of that stuff works. All of us have lived in a home, understand what it's like to live somewhere. And of course, you can make money from stuff like collectibles, like for example, like trading cards or luxury clothes like Gucci or Supreme, or even hard assets like gold or oil. But unless you want to create a business out of owning gold or oil, it'll be really hard to build substantial wealth from something like that. So building wealth is a lot simpler than you might think. I just named the 3 ways to do it, and if you think about it, they're all essentially the same thing. You can simplify it down to one sentence. To build wealth, own appreciating assets with cash flow. Cash flow is the money you receive from an asset, which is not the same as money you receive when you sell an asset. The reason I don't think owning gold or trading cards is a great way to build wealth is because they don't create cash flow. You only make money when you sell your asset. Whereas with owning real estate or owning a business, these assets produce cash flow in the form of rent, dividends, or profits. So, when it comes to the question of should you own a home as an investment or a primary residence, I think as an investment. But you'll have to wait until next week to understand fundamentally why. Or if you're watching this video in the future, go ahead and check out part 2. As always, thank you so much for watching. If you like this video, please go ahead, hit that like button, leave me a comment letting me know if you learned something good. And as always, have a fantastic day, and we will see you guys on Thursday for the podcast. Peace out.